Welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, June 10th, 2010. Welcome back one and all. Great you could join us. Today on Bloomberg.com we read Australian employers added workers in May for a third straight month, underscoring the central bank's assessment that economic growth will accelerate this year as a minimum investment boom stokes hiring. The number of people employed gained 26,900 from April, the Statistics Bureau said in Sydney today. The median estimate of 23 economists surveyed by Bloomberg News was for an increase of 20,000. The jobless rate fell to 5.2% from last month's 5.4%. So jobless rate falling in Australia is good. In more news on Bloomberg today, New Zealand Central Bank raises benchmark interest rate for the first time in 3 years, signaling that faster inflation is a bigger threat to growth and further gains in the nation's currency. Quote, underlying inflationary pressures are expected to increase, Reserve Bank Governor Alan Bullard said in a statement released in Wellington today, after increasing the official cash rate to 2.75% from a record low 2.5%. Given the current low level of the cash rate, it is therefore appropriate to gradually remove policy stimulus, end quote. That's what the governor said. Getting to the charts now, and again to recap, in Australia we see the jobless rate fall, the unemployment rate fall to 5.2%. That's the blue line, by the way. It's historical unemployment rate in Australia, falling from the prior month of 5.4%. Now, the violet line represents the 12-month moving average, and it's easy to see that the unemployment rate is below its 12-month moving average, indicating the current trend in employment, or I should say in unemployment, is to the downside, meaning we're seeing more and more jobs as the unemployment rate falls. Now, have a look at the unemployment rate. That's the violet line with the RBA, the Reserve Bank of Australia. That's the historical interest rates. Now, interest rates currently in Australia are 4.5%. Unemployment rate dropping now to 5.2%. And we can see over time, as the unemployment rate falls, the Reserve Bank of Australia raises rates in light of a stronger economy. When the economy falls and the Reserve Bank of Australia cuts rates, unemployment rises. Now that the unemployment rate is falling, Reserve Bank of Australia is raising rates. If we expect to see Reserve Bank of Australia raise rates further, we would certainly expect to see the unemployment rate continue to fall, at least not rise. Now, here's a comparison between the unemployment rate, that's the violet line, and the ASX 200, that's the equity or stock index. Historically, unemployment goes down, the ASX stock averages go up. When unemployment rises, the stock average falls. Lately, we've seen equity markets turn to the downside, unemployment ticking down as well. So eventually, we would expect the opposite or inverse correlation to resume, meaning if unemployment continues to fall, we would expect the stock market to continue to rise. Now also compare the unemployment rate, that's the violet line, with the Aussie dollar currency pair, that's the blue line. Historically, unemployment falls, the economy is stronger in Australia, Reserve Bank of Australia raises rates, and that leads to strength in the Aussie against the dollar, against many other currencies. When the economy slows down, the unemployment rate rises, the Aussie dollar falls. Lately, we've seen the Aussie dollar come down, unemployment starting to come down. Maybe if unemployment continues to fall, we will see the Aussie dollar rise. Now, of course, it's not a completely fair comparison, because there's two currencies within the Aussie dollar currency pair. However, there is a very strong relationship between employment in Australia and the ensuing currency strength or weakness. Now, we also read today on Bloomberg.com the Reserve Bank of New Zealand raised rates for the first time in 3 years. Rates now are 2.75%. They were at 2.5%. The last time we saw a rate change was when the Reserve Bank of Australia, New Zealand, I should say, did in fact cut rates from to 2.5% after coming all the way down from highs near 8.25. We have a long way to go on the way back up. The violet line represents a 12-month moving average. We have just for the first time actually ticked above this moving average, showing Reserve Bank of New Zealand one of the first central banks to start raising rates. Now, compare the RBNZ, that's Reserve Bank of New Zealand, interest rates, again, 2.75%, to the NZGI, that's New Zealand Gross Index, that's a stock average index. Historically, when the Reserve Bank of New Zealand raises rates, stock averages go up. When the Reserve Bank of New Zealand cuts rates, stock averages go down. So if inflation continues to rise, if the economy continues to grow in New Zealand, and we would expect the Reserve Bank of New Zealand to raise rates, we certainly would expect to see the NZGI stock average move up. Now we consider the correlation between Reserve Bank of New Zealand interest rates, that's the blue line, Kiwi dollar currency pair. Historically over time, Reserve Bank of New Zealand raises rates and the Kiwi dollar goes up. Reserve Bank of New Zealand cuts rates, Kiwi dollar goes down. If there's the anticipation that the Reserve Bank of New Zealand will continue one day to continue to raise rates, we would certainly expect to see that strength translate over to the Kiwi currency. We hope this has been helpful. If you have any questions, you can contact us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.